Uh, got it. All right, welcome NEXA Mortgage. Thank you guys all for joining today's call. My name is Juan Caban. I'm from Financial Lynx. We'll be presenting some of our capabilities and products on the real estate side that we can do and hopefully be an added value to what you're currently doing and bring you guys more money in your pockets, which is the overall goal, right? It's making sure that you're taking advantage of every opportunity that's presented to you to make sure we can close more deals and make money, right? So today I'm accompanied by a few team members who are on the call. We're all sitting in the same conference room. So if there's an echo, just let us know. But first, Charles Wolf, he's our Vice President of Loan Origination. We have Arthur Irizarry, who is our Head of Real Estate Originations and our real estate specialist here. And then we have your dedicated account manager for NEXA Mortgage, which is Greg Derwin. So he's going to be your main point of contact on any opportunities first before it goes through our processing team. So he'll be able to answer all your questions. I'll let Greg say a couple words and then we'll get to our presentation.
Great, thanks, Juan. It's wonderful to have everybody here. We appreciate you taking your time out of your busy schedules to hop on and learn about who we are, what we do, and really more importantly, how we're going to how I'm going to work and my team's going to work really hard to make sure that we're monetizing everything that comes across the board for you guys. So our specialty, one we'll get into it, is going to be commercial investment mortgages. So as you guys are out there trying to drum up business, how you usually do, don't let commercial or investment mortgages be something that you don't want to focus on or think about, because that's what we're here to do. Our main partnerships are residential mortgage brokers and banks, and they rely on us and our expertise in those markets to monetize their deals because they're focused on what they're focused on and we're focused on what we're focused on. So I'm not going to get too much into that. My email is in the portal. My number is in the portal. I'm here to go to work and be a really good resource for you guys to answer all questions and get deals into the pipeline and make sure that we're positioning ourselves to help your borrowers out, empower you guys to understand how these markets work, and then eventually empower your clients to be happy because we close deals. We're doing a lot of it. So I'm Greg Derwin. You guys will see my information there, and I'm ready for this. Thank you, guys.
Thank you so much, Greg. We are really excited for this partnership that we have now with NEXA Mortgage. We have set up a PowerPoint presentation, so I'm going to share my screen. There is a chat on here. If you guys have questions, I do have one of my team members managing the chat. We will try to get to everyone's question accordingly. We'll probably get to a Q&A towards the end of the presentation, but if you have something and you don't want to forget it, just put it on the chat and we'll try to get to it as soon as possible. So let me share my screen here. Great. Can everyone see my screen? Mia, can you see my screen?
Yep.
Excellent. Yep. Excellent. Great. So Financial Lynx, we are a commercial lending platform. Sure I can go to the next. Here we go. Great. So some of the things we're going to talk about today. Great. Some of the things we're going to talk about today is, what is the Financial Lynx platform, right? We'll talk a little bit about who we are, how we got to, how we got to this point and this platform that we created. We're going to talk about some of the properties that we currently do business with that we're able to finance. We're going to talk about DSCR mortgages and what is a DSCR mortgage and how you can utilize that in your day-to-day business. We're going to talk about owner-occupied commercial mortgages. We're going to talk about bridge loans and hard money, and we're going to talk about some ground-up construction, some of the things that we do here. So who are we, right? What is the Financial Lynx platform? So I'll tell you a little bit of background. So I myself am one of the founders here. We started the company in 2019. We're a team of former bankers. We used to be in the conventional banking space, lending, I call it boring financing, right? But looking at tax returns, making sure someone can qualify on the tax returns. Eventually, in 2019, I got tired of declining clients, right? You have very qualified clients, but because the lending parameters of the bank, we weren't able to approve them for whatever reason. So in 2019, I left banking and I ideally started Financial Lynx with the goal of focusing on alternative financing solutions for real estate investors, right? So what we noticed is that there's three types of borrowers. There are the qualified borrowers, there are the very, very high risk borrowers, and then there's the borrowers that kind of are in the middle, right? A qualified borrower can walk into any bank that he wants and get whatever he wants, right? He can go into Chase, he can go to Wells Fargo, he gives all their tax returns, and he essentially just wants the cheapest rate on the block, right? He goes to NEXA Mortgage, right? You guys will take all the tax returns and you get whatever you want. And then there's the high risk borrowers, right? The borrowers that had the maybe some bankruptcy, some mortgage late or something like that. It's very difficult to get. But then you have these borrowers that may have maybe some down payments, maybe they're business owners and they don't show a lot of money in their tax returns. And a lot of times it's very difficult to qualify those type of clients. And a lot of business owners really invest in a lot of different projects in real estate. So what we try to focus on is those borrowers that don't really necessarily qualify on a tax return perspective, but they essentially have the assets or the liquidity to purchase real estate and want to invest in the market. So what I want you to understand that Financial Lynx, we're not essentially like a direct lender. We don't have a fund here that we send money. What we've done is that we've created a platform of hundreds of different lenders throughout the country, right? So right now, I know NEXA has created a similar platform, but right now, what you guys do is not only are you managing your day-to-day activities, but let's say you have an opportunity for commercial, you have to go through that platform and identify which lender essentially is the right lender for that client, right? And that takes a lot of time away from your day-to-day business. So a lot of times you might be calling or emailing a bunch of different lenders and saying, hey, who can help my client? And a lot of times you don't know what their actual parameters or capabilities are. So what we've done is we created a platform to simplify your day-to-day activities, right? So we screened hundreds of financial institutions throughout the country, probably a lot of the same institutions that are currently in your platform. And we've screened them and we understand what their underwriting capabilities are, what type of financing that they do. And we took all those underwriting criteria and we created kind of a very, very unique platform that allows us to screen and place loans at a much faster capability, right? So right now, essentially we have what we call the deal summary sheet. The deal summary sheet is submitted by the loan officers. That deal summary sheet gets put into our platform and the platform quickly identifies who's the best institution for that particular scenario. So that allows you as the loan officer to not have to think, hey, who can I call for this particular scenario? Because most of the times when it's business purpose types of loans, which we're going to describe today, we have all those lenders in our platform. So we get the information within 24 to 48 hours, we're able to get turnaround times with pre-approvals, either additional information, but we get what's most important is engagement, right? Which is one of the most difficult things to do. You might have in your set of lenders in there, you might have someone that you might call or email, and they might not get back to you in a long period of time, or maybe they don't think it's a good fit, so they don't qualify. So we're here to make your life a lot easier. And that's the one thing that I want you to get out of today. We're a one-stop shop for alternative financing solutions. So here are some of the types of properties that we're currently financing. So again, most of our financing are business purpose. So if someone is going to live in that property, most likely it's more of a NEXA mortgage than it is a Financial Lynx type of mortgage. But we finance condos, someone that maybe owns a condo and rents it out, or someone that maybe does an Airbnb condo or something like that. So condos, single family homes. We do multifamilies, anything from 2 units, and we're working on a file right now that's 92 units out in Egg Harbor, New Jersey. Mixed use properties where there's a retail or some sort of business component to it, where there's residential components to it. So you have both types of in one particular property. Industrial, these are like warehouses, wholesalers, manufacturing, anything where it's an industrial park. We're financing those. Office buildings, a lot of times like medical offices or CPAs or attorneys are in office buildings. A lot of times they have office condos. We can finance those. Retail is like your standard storefronts. Restaurants, I put it in there. Restaurants can be challenging at times, so we're able to finance some restaurants. And but again, they're not really preferred, but that's retail. And then you have what we call as our specialty products. You have your hotels, your gas stations, your golf courses. We received a referral recently of like a farm or something, or a cabin or a ranch, right? These are all not your standard, multifamilies or residential units. Those are all specialties. These, I say, are not favorable properties, right? We can do them. We have some resources that can do them, but it's not. These are not, we were not getting as competitive as we are with the other types of assets. So with us, really, you want to focus on anything from a condo unit all the way to maybe office space. These are all primary. These will be considered primary real estate that we like to lend against. And then you have your kind of secondary, more specific and niche types of markets. But again, we do have resources for those. So let's first talk about the types of financing we do. The most common type of financing that we see here is what we call as a DSCR mortgage. Now, what is a DSCR mortgage? Now, the first thing we have to understand, again, I want to mention this, is that it's non-owner occupied. The person or company does not occupy the space. These are strictly investment or purpose loans. So DSCR stands for debt service coverage, right? We can do those on a purchase, a refinance, or a cash out. The best part about DSCR loans is that there's no tax returns required for this. We strictly underwrite the subject property, right? We take the rental income that the property generates, or the market rent if it's vacant, and can potentially generate. And if the rental income can support the mortgage, taxes, and insurance, then essentially we have a deal that we can do. Right, so DSCR mortgage, we look at the property. We don't really care if they're making $20,000 a year or $1 million a year, although helpful in some cases, but we're looking specifically at the subject property and can it generate enough income to support our mortgage. The minimum loan amount that we do with these are typically around $100,000. So on a single family home, we can, if the borrower has really good credit, we can actually lend up to 85% of the purchase price or the appraised value of the home. Most institutional, just so you know the difference, most banks maybe can do 75% or maybe even 80% on these. 75 is the standard, 80 if they're aggressive. We actually have some resources and some private lenders that can do up to 85%. The rates start around 4%. That's typically our floor rate. These rates are going to be contingent on what's my loan to value, how strong the borrower's credit score is, what type of debt service coverage. The better the debt service coverage, the more discounts they can get on the rates. But if you have a tier 1 borrower with a very, very good asset, typically we can get as low as 4%. Depending on whether this is a commercial or residential unit, we can go up to 30 years amortized, right? So which is really, really strong. Most banks only go up to 20 to 25 years. We can go up to 30 years on even commercial properties, which is nice. On residential units, so anything from 1 to 20, we can go 30-year fixed. On anything that maybe has either a mixed use component in it, or if it's a commercial property, we can amortize it over a 30-year period, but typically they have a 5, 10, 15-year terms on the loans. Actually, I made one error. On the 1 to 4, we can actually go up to 40 years, which is very unique. The 40-year product It's a nice product. It gives you 10 years of interest-only payments, and then it fixes over a 30-year period. But we can actually go out up to 40 years on the residential DSCR mortgages. Another good thing about this program is that they typically close relatively quickly. So essentially, once we quote out the clients and the client's ready to proceed, the next step is that we order an appraisal. Once the client pays for an appraisal, typically takes about 2 weeks for us to get the appraisal back. Once in those 2-week timeline, we're collecting all the necessary documentations to submit to underwriting. But in a best case scenario, once we get the reports back and the title reports back, we can close about 1 week after that. So our typical close times are anywhere between 30 and 45 days start to finish. And of course, this is always contingent on how engaged our borrower is with getting us the information that we need. The good thing about this also, FICO scores, we can go as little as 600 FICO score for investors. Of course, a 600 FICO is not going to get you the 85% loan to value. There are some caps depending on credit score, but we can work with borrowers on that. I know we have some questions coming in. Anything that's like on the DSCR related?
Yes. Can Airbnb use to cover rent?
Yes. So on the Airbnb property, someone asked about is if Airbnb data can be used. So on Airbnb, if it's a refinance, we can take a look at the last 12 months of statements, and as long as we can show that there's enough income coming in to support the mortgage, tax, and insurance, we use that. If the plan is to have Airbnb, then we use a program called AirDNA, which gives us data of the particular area. So it'll say, this particular area generates about $30,000 of annual income. Then what we do is we take 80% of that data, and we use that as an estimated market rent. And then we use that to see if the person qualifies for a mortgage. Anything else on DSCR?
Just that if they can help that out, can you wait for profit and then let's look into it?
Yeah.
I have
okay.
a question.
Great.
Yeah. Hello. I have a question. So for the refi cash out for fix and flip single family home, do you need to have to be 6 month seasoning?
So, okay. So you said fix and flip. So we're not up to fix and flips yet, but on DSCR, we have one lender that can do 3 months of seasoning, but the standard is typically 6 months. So 6 months of seasoning is the standard. Yeah. So if someone is doing a fix and flip loan, they might have, and they want to refinance it to long term, they're gonna want to probably hold that note for 6 months before getting the appraised value. If they do it before the 6 months, they're just gonna get the purchase price plus whatever they put into the property. So if they bought it for $100,000 and they put $30,000 of work into it, the maximum we can do is $130,000 as the value. But once you get the 6 month seasoning period, then you get the appraised value, which is much nicer because they'll be able to get a lot more money out of the property. Thank you for that question.
So what's maximum on the LTV on it? 80 is possible?
Depending on the type of property. On a single family home, for someone who's 740 or higher credit score, we can go up to 85. But the standard is typically on a refi, it's typically 75% is what you're going to get best rates and best terms is typically on a 75% on a refi.
And interest only options available as well, right?
Say that again?
Interest only available?
Interest only options are available on our 40-year product and our 30-year product. Actually, we do. Actually, I'm sorry. We have a 7-1 interest only on our 30-year product that we have as well.
Okay. And the last couple of things is like for the DDSCR, you guys taking less than 1? The ratio less than 1.
So less than on a vacant property, on an occupied property.
On the vacant.
Yeah, we have some, some that can go a little less than 1. It's just the rates are not going to be as favorable. At 1-to-1, you're getting favorable rates. We do have some options for under 1. But what I like to do, what I typically like to do if If it's under one DSCR, I just give them an interest-only product, right? Because the interest-only, the payment's going to be a lot less, and then we can get them at that like 1, 2, and get them nice. So that's why the 40-year product is very nice, guys, because you can get 10 years of interest-only. So the DSCR is going to be the requirement is very low. But again, the interest-only product allows for the flexibility in when the DSCR doesn't meet one.
Awesome. Thank you.
Great. Thank you for those questions.
Hey, Juan, just real quick. Do we
Yeah.
have a cap on how much we can make with you guys?
Each particular investor that we work with, we're going to tell you what the cap is, right? So the maximum you can make is like 5 points, some is like 4, some might give you yield spread, right? So, as an intermediary, we're going to tell you like, hey, here's the quote. You can charge up to 3 points. You can charge up to 4 points. You can only charge 1.5. So as part of the quote that we give you, we're going to tell you exactly what's the maximum you can sell on these.
Okay. And what is your cut? Or maybe you're going to get into it later in the presentation. I can wait.
So anything that we quote you, anything that we're entitled to is going to be factored into the transaction, right? We have an agreement with NEXA that you're going to get the quote, and I'm going to say, hey, here's your quote. You can charge up to X amount, and our fees will already be included in the quote, and you'll still be very competitive.
Okay.
We take a very, very small margin. Yeah.
Thanks.
Okay. Great.
Question.
Yeah, so someone asked about upfront fees on the DSCR program. The only upfront fee for the client is paying for the appraisal. That's the only thing you have to pay for.
Yeah, are they able to reassign appraisal?
So reassignment of appraisals. So if someone just got an appraisal from someone else, and first we have to see who did the appraisal. If it was ordered by an AMC, an appraisal management company, some lenders will just take the appraisal as is. Some of our investors, or it has to be reassigned, which means you go back to the company that ordered it and say, hey, we're not going to use this appraisal, and as long as they write a letter, we'll accept that letter and take the appraisal. As long as it's ordered properly, guys, because if the appraisal is ordered but it doesn't have an income statement or a market rent analysis, then we're not going to be able to use it. We need to, when we order an appraisal, we order an appraised value as far as the value of the home, but we also have to order a market rent analysis just to make sure that the market rents are in line with what they're getting, just to cross-reference that. So we got to make sure that those appraisals have that.
There's non-recourse option.
Non-recourse is not really available in loan amounts under like $3 million. So when we start getting above $3 million loans, there is some non-recourse options that we can put in. But most of the time, it's personally guaranteed. However, I do want to make a point that we do not report to personal credit. It's very important to understand is that most of our lenders on a DSCR mortgage, although you're personally guaranteeing it, it would never show up on your credit report, so it can't impact anything you're doing personally.
All right, what about closing the LLC?
Yeah, so we prefer that you close an LLC on the DSCR mortgages. It's preferred.
Would you do a cross collateral loan? I have 3 single family homes, amount to about 150 in financing.
So there's going to be those are portfolio loans. Portfolio loans, typically we want to have at least 5 properties in a portfolio loan. And then the challenge you're going to face with that particular property is most investors, the property value needs to be like 120,000. So if it's under, like, if it's a very small house, it's only worth like 30, 40,000, like no one, at least in our resources, are going to really touch those types of properties. Yeah, I'm gonna go on to, there was some other questions, but we can probably get to that towards the end. I want to make sure we get through the presentation. So just keep writing on the chat and we'll try to get to everyone as much as possible. So that's DSCR mortgages. I hope everything was pretty clear on that. So the next that we're going to talk about, the next most popular loan request that we get, is our fix and flip loans. Our fix and flip loans are essentially if someone is purchasing a vacant property or or any type of property that is in need of rehab, and then they're adding some kind of value to it, it would fall under the fix and flip loan. So it doesn't necessarily mean that you're going to sell the property. So if someone wants to buy the property, rehab it, and then hold it, like refinance and hold it, it would still fall under the fix and flip loan. So again, someone's purchasing a property, probably vacant, with the intentions of rehabbing it and adding some sort of value. With these, we can do single family homes, we can do multifamily homes, and we can do mixed use properties. Typically, the mixed use, we want to see that the residential component is at least 51% of the entire piece, but it's on a case-by-case basis. We don't really do fix and flips with industrial properties or retail properties. So, you know, when it comes to fix and flip, you want to just think, is there a residential component to it? If it is, then we may have an avenue for it. We have some programs with the fix and flip where actually an investor could put no money down. We could finance 100% of the purchase price and 100% of the rehab, right? Which is fantastic. Now, like the one thing you want to keep in mind with putting no money down is that it's all about the after repair value, right? So on 100, typically the maximum after repair value is going to be about 70%. So what that means is that our total loan cannot exceed 70% of the after repair value. Now on the 9100 program, we go up to 75% of the after repair value. Now, you know, you might have an investor that says, oh yeah, when I finish this property, it's gonna be worth 600,000, and we can quote it as that. But when we send an appraiser out there, what we're gonna do is we're gonna provide the appraiser with something called a scope of work. So the investor is going to give us the scope of work of everything they're going to do to the property. We're going to give it to the appraiser. The appraiser is going to give me two valuations. They're going to give me an as-is valuation, and then they're going to take what you're going to do to it, and then they're going to give me an after repair value. So we have to make sure when we're quoting that the investor knows what he's doing and make sure that the numbers are going to be right. Because if the appraisal comes back and it's short, then the loan amounts are going to be adjusted. So again, the after repair value is after it's all complete, what is that property going to be worth? So we can lend up to 75% of the after repair value. These payments, these terms are typically a 12-month terms. It doesn't mean you have to hold the mortgage for 12 months. There's no prepaid penalties on these. So the investor could, the faster he flips it, the faster he does the work, the faster he can get out of the loan. Right, so there's interest-only payments. Again, typical terms are from anywhere from 6 months to 12 to 18 months. We've done on the much bigger projects. I mean, we can go out to 36 months on the really big projects, but the standard is typically 12 months of interest-only payments. The loan amounts again start about $100,000 on these. You know, typically, you know, we want to see that at least the house is going to be worth over $75,000, and then you know, $30,000 or $25,000 of rehab. So we want to make sure that our total loan is going to be over $100,000. The interest rates on these, we have some programs that start at 6%, which is very, very aggressive in the fix and flip market. The standard rate you'll see when you go on the internet and things like that, it's typically anywhere, you know, 9% plus is, you know, with maybe 2 points. So our rates, we have some programs that start at 6% on the fix and flip. And it's going to put interest only twice, but and then experience is preferred, right? So someone who's done no flips in the last 3 years is not going to get 90, 100 with 75, you know, % after repair value. So we want to see at least 3 flips in the last 36 months. That way they can get the maximum value on these. And the FICO scores on this typically are around anywhere 620 and up. We can start having financing options for these types of loans. So
multi-units, how many max multi-units? What's the max? 50 unit?
On a fix and flip loan, the maximum loan amount, I mean the unit amount?
Yeah, multi
On a residential?
Yes, like apartment building.
Yeah, so we're doing one right now that's 92 units.
Great.
Yeah, so we're doing one in Egg Harbor right now. It was an investor, he took an old hotel, a motel, and he turns it into low income housing, and it's 92 units going to come out to, and we were able to provide him with the with fix and flip financing. Now, of course, the bigger the operation, the leverages change a bit. You know, it's not as simple as a 9100, but you know, but the capabilities are there for us to do it.
Do you do new
Do we have any questions on
construction?
the investors?
All right, with one second.
Yeah, so new construction, we're gonna get to new ground up construction. It's gonna be on the last slide, so we'll get to the parameters for that.
And what about maximum dollar amount for fix and flips?
Maximum, I mean, we've done all sorts. We've done all sorts. What's the largest deal? I think we did like 15 million once. You know, it's there. You know, I can't say that we've done $100 million, but we've proposed $100 million. We're proposing one right now in Flushing, Queens. That's $100 million ground up construction. It's not necessarily a fix and flip, but we haven't really seen anything that we can't do yet. As far as maximum,
Minimum.
the minimum is 100,000 on the fix and flips. So we want to at least see 100,000 out the door.
John asked, can you share us the writing for PG, the personal guaranteed debt will not show up on credit reports of borrowers?
I mean, I have to. It's typically in the closing documents. Someone asked a question here about the verbiage of the personal guarantee that it will not show up on the credit report. No one's ever asked me that before, but I'm sure it's in one of the closing documents.
Does the owner of the LLC have the PG loan with the SDR programs? If so, for how long?
Yeah, the personal guarantee applies for most mortgages under 3 million. So it's for the length of the loan.
Do you ever do exceptions to your 100K minimum? So I have a client looking for either a DSCR or a loan house.
Do any of your products appear on personal credit?
No, these are all business purpose loans. So they're written to the LLC, so we don't report to personal credit. The minimum, which we have to stay firm on the 100,000 minimum. We've done smaller loans, but I'll be honest, guys, there's just no money in it, right? I mean, even if you charge a guy 4 points on a $50,000, only making $2,000. I mean, it's not. After you do all the splits, there's no money in it, you know. So we just want to focus on 100,000 and above loans.
New investors.
New investors we can do them. New investors get capped at 65% of after repair value on fix and flips. So 65%. So they have to purchase something really, really good for it to make sense for them, or they have to bring a lot of money to the table.
What is the credit required for investors on the flips?
For the credit requirement for the fix and flip program is 620 and above. So 620 will start entertaining investors.
Your commercial loan, are you able to do 1.1?
Commercial loans, we've done all sorts of loans. So anything from $100,000 to, like I said, we're bidding on a $100 million project. We've done $25 million projects. So we have the capabilities to take any of those and get them funded.
You have to be licensed in the state.
So that's a good question. So someone asked if you have to be licensed in order to do business purpose loans. In reality, the answer is no. Business purpose loans, you do not have to be licensed, so you can actually originate loans in most states. I think like Arizona sometimes is a little tricky. So Arizona sometimes they do have some weird laws, but we've originated loans in almost every state without a problem. And we do not have licenses in every state. We are licensed in like 8 or 9 states. I think I'm licensed in, but we have as a business purpose loan, those license requirements are not required as they are in the NMLS. Right.
So this KB Collins is asking multiple questions. Says this is your broker, non third party, not direct correct. You add your fee of the origination company to deal with.
Yeah. So again, I'll reiterate. Someone asked, if we're a direct lender or not. We essentially wholesale and we white label for a lot of private investors in the secondary market. So again, we act as intermediaries. We take a very small margin. The quotes that we give you are going to be very strong, right? Because again, we have so many resources. We think that we work with the best lenders out there. As a wholesaler, they give us wholesale pricing, just like they do in the residential market. To be honest with you, I tell this to everyone we work with, just to be fully transparent, because honestly, when we do our loans, you will never really know who our investors are, or because everything says financial links on all the documentation, and we do everything from start to finish. So we order the appraisals, we order title if we need to, we do all the processing, we do everything, and then the only difference is that there's going to be a trust or a different investor that's going to be financing it. For your client, it's going to be a servicing company that's going to service the loan. So it's just like any one of your mortgages that you do on an everyday basis. So just want to make sure we're clear, we're transparent, and we know exactly how quickly can we close them. So fix and flip loans, we can close as quickly as 2 weeks. It all depends on how quickly we can get an appraiser out there. As you guys know, getting an appraiser out there is challenging. So depending on what area you are and the demand for appraisers will depend on how quickly we can close these. We're doing a deal right now in New Hampshire. It took like 4 weeks to get an appraiser to go out there. Boston market, for some reason, Boston has been hard to get appraisers out there. In the New York, New Jersey market, where we're still out of, we've been able to get appraisers back in a week and a half, 2 weeks. So it really just depends on how quickly an appraiser goes out there. On the fix and flip loans, we're able to close like 3 to 5 days after we get the reports back. So it moves relatively quickly. Yeah, so for every loan that we do, there is going to be a servicing company that's going to be attached to it. So we don't know who the servicing agent is. I'm going to move on to the next portion here is our ground up construction capabilities. So ground up construction, I want to reiterate. So I want to say here. So it's purchasing land for the purpose of building a structure with intent to rent or sell upon completion, guys. We've been getting some requests from NEXA. Someone, folks want to do ground up construction, but they plan on living in it. We cannot do anything that they plan on living in it. This is strictly for investors. So again, they're purchasing some sort of land and they plan on building the structure with an intent to sell or refinance upon completion. With these, we can do single family homes. We've done condo units, multifamily, and mixed use. We prefer that the transaction be what we call a shovel ready. So a lot of times, most of our investors will take out some sort of land loan just to get the land. They'll get all the permits and plans and everything ready. And essentially when they're ready to break ground, that's when they'll engage us for the construction cost. With this, they must have experience. We don't do any newbies with ground up construction. Ground up construction is complicated as it is. Most investors don't want to see any newbies doing this, and there's a lot of things that can happen when doing ground up construction. We can lend up to 85% loan to cost. That is a very, very high number. The standard in the banking industry is maybe 65 to 75%, 70% loan to cost. Some of our investors can go up to 85% loan to cost with interest only terms from 12 to 36 months. Which is nice. So what does loan to cost mean? The cost means is like it costs you $1 million, $1 million to buy the land, $1 million to build it up. So your total cost on that project is $2 million. We'll lend 85% of the $2 million. The investor puts in his 15% equity injection up front, and we finance the rest of the project till it's complete. Typically, again, ARV still applies to this. 75% ARV after repair value still applies to this, that's essentially it. Rates for this, did we put the rates on here? Yeah, there we go. I'm sorry. So with these, the loans amounts start around $500,000. There's a lot of involvement here with the reviewing permits and titles and all sorts of things. There's a lot of involvement in this. So the minimum loan amount on ground up construction is $500,000. Our rates are anywhere between 6 and 10% and interest only payment. Again, 85% is very, very strong. Going out 36 months is very, very strong. And my rates being 6, my average rate on these, I'm coming in around 7.5% for ground up construction, which is very, very close to bank rate. And again, with these, there's no tax returns required, right? We just want to look at the experience of the investor. We'll maybe look at a personal financial statement to show how strong he is liquidity wise. And then we're going to take an overall look at the project to make sure that the after repair values and the performance on this meet the requirements of the lender. I'm sure a lot of questions on this. We can do business
No,
in Florida.
How much experience do you need to get this type of loan?
We want to see at least two similar projects in the past, right?
Okay.
We're working, yeah. And listen, one of the factors. So if they're a general contractor and have experience doing it, just it wasn't their own money, we'll consider that as a newbie. So if they're a general contractor or something like that, if it's an investor with money, we recommend that he does a joint venture with some sort of contractor that's done these in the past. These are some ways around it that we can still get comfortable with it.
Okay.
Good question. So someone asked if the land can be the equity if the developer purchased the land. The answer is yes. So anything that the investor inputs into the project will be considered as his equity injection. So a land purchase, if he bought the land cash, we'll consider that. Architectural drawing, permits, anything that he spent, as long as he has documentation that shows he spent into it, we give them credit towards their 15 or 20% equity injection into the project. So that's something that not everyone does.
No question, just John Nugent is ready to go.
Yeah, so John asked the question, someone's purchasing a single family home with large lot and they plan to build 12 units. Yeah, I mean, we would almost consider the single family home as part of the land purchase per se, as long as he has experience and everything we talked about, that shouldn't be a problem as far as doing a build out on that. Yeah. So I'm gonna get to as far as like where you can submit your scenarios and things like that. Is there anything else on the construction you see? Oh, great. Okay. We're gonna move on to the next thing. So what happens when someone needs quick money, right? Or they say, hey, I want to buy this property, but there's no rehab component on it. So we have something called bridge loans or hard money, right? Bridge loans and hard money is the same thing. We like to use bridge loans. A lot of people like to use hard money. I don't like to use hard money because everyone thinks that once you hear hard money, you're thinking 15% interest rate, which is not what our investors could do. So again, so a bridge loan, typically the property is vacant or there's not enough cash flow to support the mortgage. So sometimes you might buy a property that the people have been there 20 years and they're paying very, very low rent, so it doesn't debt service, and we can't do it under the debt service program. We're able to provide them a bridge loan just to purchase the property, right? Once they own the property, they can get the tenants out or whatever the case would be. Or if the property is just vacant, right, and they just want to get in the door, they say, I'm going to do my own rehab. I'm going to finance it out of my own pocket. So typically these bridge loans are anywhere between 6 and 24 months. We can do up to 70% of the purchase price or the as-is value, whatever comes in lower. Interest-only payments, the rates for this started at 6% and up, and the loan amount typically around $250. And in some cases, I've been able to close as fast as a week. We had some clients that might have done appraisals and everything, and then for whatever reason, the lender wasn't able to approve it. We get a lot of times we get this coming from banks, right? Sometimes we had a scenario last month where it was a medical surgery center. He was buying a garage next door to expand his medical surgery center. At the very last two weeks before closing, the bank is like, wait, this is just a garage. Like, we can't finance this. And the guy's like, well, I don't have a mortgage contingency. I'm going to lose my deposit. And he was going to lose like $100,000 deposit if he didn't close by a certain date. So the bank said, hey, can you provide a bridge loan or something to get him in the door? We were able to take that particular property. We looked at it, we valued it. And in 1 week, since the appraisals and everything were already done, we were able to get them the I think it was like $390,000 loan, and we were able to close it in a week. So we're able to move relatively quickly if a lot of the information is there, but on a standard average, it's typically around 2 weeks. Sometimes these bridge loans or hard money don't even require an appraisal. Sometimes we might order a desktop appraisal, or we might do what we call as a BPO, a broker's price opinion. And if we can get comfortable with the asset and the location, sometimes we don't even need to order an appraisal, and that allows us to move a lot faster on these bridge loans and hard money. So that's that. Any questions on bridge loans or hard money?
No.
Okay. Great. So this one's pretty straightforward, guys. Now let's talk about owner-occupied properties, right? So this applies typically for commercial properties. You have someone who owns a manufacturing facility, and they say, hey, I've been renting, and now it's time for me to I want to buy, right? With owner-occupied commercial properties, you have to think about just like you guys underwrite, primary residence loans in the residential market, right? You have to look at the tax returns for the particular individual to make sure that they make enough money to afford a mortgage. On the commercial side, it's the same thing. When the business is moving into the property, we need to make sure that business makes enough money to support the mortgage, right? So this is the only mortgage that we do that will require tax returns, not only personally, but for the business. The good thing about this is that once we provide all that information, the rates are going to be really, really aggressive. I mean, you're going to be rates in the threes. These are bank rates. Typically, these are 20 to 25-year terms, and the loan amounts start from $300,000 or above. Our team here, we underwrite the file, make sure that they qualify, and then we'll place them with the proper lending institution to support their needs. A lot of people don't know this, but if the business occupies 51% of the entire space, they may qualify for 0% down financing through what we call is our SBA program. The SBA is similar to what your FHA is in the residential mortgage side. The SBA allows for, a lot of people think it's 10% down, but we have some banks that actually can do 0% down as long as they have strong business financials and personal financials. They can actually buy the property with 0% down. We can also tie in any construction costs or anything like that. Sometimes they move in, they have to order certain equipment and do some construction to make it fit their needs. We can tie a lot of those construction costs into the loan. But these loans are just a much more involved loan. They take a lot of time. Typical close times for these loans are anywhere between 60 to 90 days. Depending on how quickly the borrower gets us the information. But again, it's just another option that you have when you have a commercial business that's going to be actually being in the property. So any questions on owner-occupied mortgages?
I have a question.
Yeah.
I have a investor that's looking at a marina. It has a snack bar, a restaurant on it, 14 boat slips. It has 3 single structure not buildings, but houses on it. He wants to live in one of them. Would that qualify for something like this?
If he's gonna live in the property,
Yeah.
we can't touch it. Yeah, we can't touch it.
Okay, so if he doesn't
everything
live
has
in
to be
there, you can.
investment.
Okay, so if he
I would
doesn't
have
live
to-
in there,
Yeah, if he doesn't
just
live
said
in there, we treat it as pure
owner-occupied.
renting. Owner-occupied, I mean
so-
by the business. The business occupies the space, right? Not the
Okay.
individual occupying like an apartment in the space. It's like if they own a business, if they're a business owner, and they have manufacturing facility, a restaurant, a cell phone store, whatever, they're a business owner and they're currently renting and they want to move their business into into a different facility and they want to own, right? This is owner occupied commercial. So the business is going to occupy the space.
Okay, let me talk to him about it, because if he's not gonna live in the property and strictly use it as a investment property, for the business, you definitely have one of the products that can help him buy the marina, right?
Right. Yeah. I mean, again, these loans are a lot more involved. The tax returns are required and everything like that. But we can definitely take a look at it, start underwriting it. But don't expect, a 24-hour turnaround time on these.
No, definitely not. But he definitely want to buy it. So So I'm trying to
Sure.
make his
We
dream
can
come
take a look at
true, right?
Yeah,
Okay.
listen,
And
that's
he has
what we're trying to do here. Yeah. We're trying to help
Yeah,
people,
he-
fulfill their goals.
Okay, perfect.
One, just my question is, I have some clients who have two commercial properties. One is owner occupied, their own businesses in it, and they're looking to refinance it for longer term. So how does that work as a refinance?
So they have two properties. Their business only occupies one of them, and one of them is an investment.
Correct.
Sure. I mean, it would be two different transactions. One transaction would be a pure, investment loan, and
Right.
one transaction we would underwrite it as an owner-occupied loan.
Yeah, they've got a good tenant in the investment. It's the state government of California, so it's a pretty good tenant to have.
Absolutely.
And the other one's their business, which has been going for like 20 years, which is strong. So what sort of rates are you looking at? Similar rates as for the purchase, like in the threes?
On the owner occupied, we're going to be in the threes, maybe low fours or something like that.
Right.
On the investment commercial, is it what? So is it commercial is like a funky word. So is that commercial with residential components, or is it purely like
No, it's a
industrial?
mixed use. I think it's a storefront at the front and a warehouse at the back on the investment one.
Gotcha. Yeah. So those rates for mixed use properties, the rates are going to be, I would say, like starting at 5%, but no tax returns required. So somewhere around 5% to like 5.5% is probably where you're going to be on something like that, depending on what leverage they want. Like if they want maximum leverage, then you might be in the 5.25, 5.5 rate. But if they only want 50%, 60% LTV on it and it cash flows, then they're going to be in the lower tier rate.
Round 5, yeah, that's 50%. And so, and all the tax returns, all that, you guys all sort that out. We just send it to you, and you work out their income and stuff. Is that how it works?
Yeah. We have an underwriting team here. So we will give you like a checklist of all the items that we want to see. Once we have everything on the items, then we'll start underwriting it, seeing what's good, what's bad, what some of our challenges going to be. We'll set up like a strategic plan, right? Because a lot of times when we present like owner occupied properties, we deal with the banks. A lot of times you only get one shot to have really good first impression with the bank. So we make sure that we have our strategy and what we outline, make sure all our challenges are addressed up front. So then when we approach the bank, we say, okay, these are what our challenges going to be. Do you feel comfortable moving forward? And then, if we've done our work, then yes, we'll move forward and be able to get the client what they need. So so with these, we're going to be in-house, really underwriting, understanding the business and what they do. And then once we have our strategy, then that's when we start engaging the banks on this.
Okay, yeah. And that's a minimum of 300K on that, is it?
300K is where we want to start on this. Yeah.
Yeah. Okay.
Thank you.
Good.
Maximum size.
Okay, so quick question, going back to the fix and
max. Yeah, go ahead.
okay. So going back to the fix and flip, are there any fees involved with the fix and flip?
Sure. I mean, for any fix and flip, there's always going to be fees. I mean, you're going to have your standard fees, right, which is your appraisal, your title reports, and kind of standard closing costs. As far as origination fees, we have some programs that may only charge 1 point, and we have some programs that are going to charge more points, right? So it depends. If someone is rate sensitive, maybe we might give a very aggressive interest rate with some points up front. If someone is point sensitive, then we might go with the higher interest rate with less points, right? So we really try to find what's best suited for the borrower. We'll always give you different options when we quote.
Okay, sounds good. Thank you.
Yeah, thanks. So again, guys, I know there were some questions on hey, why we're working with an intermediary. It just to make your life easier, right? We're a one-stop shop for alternative real estate finance, right? All you literally have to do, you don't have to really, we went through all our programs, but you don't really have to understand our programs in detail to have success working with Financial Lynx. We have what we call it the deal summary sheet, which I'll show you guys in a minute. But a deal summary sheet, it has all the questions that you will need to answer to whoever is looking for financing, right? We're probably in the next 2 weeks, we're going to launch the web version of the deal summary sheet. So essentially, you can just send the client a link, and the client just completes complete the questionnaire, and then we'll be able to quote the client within 24 to 48 hours. So we're looking to make your life easier, right? So if you quote us out with 1,000 different lenders, are we going to be the best? We try to be the best, but maybe not going to be. But what we want to make sure that we address here today is that we want to make your life easier, right? So we handle everything from start to finish. So essentially, you complete the deal summary sheet, you send it over to Greg, which is your main point of contact. Greg will may ask any clarification questions or anything like that. But if the deal summary sheet is complete, then essentially the next email you're going to get from Greg is some quotes of some of the options to the client. And then when the client is ready to proceed, all you literally have to do is hand off that client to us, and then we take that client right to the finish table. And all you have to do is essentially wait to get paid, right? So we're taking a lot of the workload off of your plate, and we're taking that on. And again, we have a lot of different products for the business investors. So that's gonna, again, make your life easier, and you don't have to know every single product that's out there. You know, if there's anything that you're unsure about, you can always reach out to Greg with different scenarios and things like that, and he'll get back to you in a prompt manner. As well as you can always email realestate@financiallink.com, which will go to our real estate division, and anyone will be able to answer you in a prompt manner. I'm gonna see if I can show you guys one more thing, and that's what our deal summary sheet looks like. And I can just show you how simple the deal summary sheet is. Can everyone see that? Yeah, great. So here's a deal summary sheet, right? So when you fill this out, first, obviously, we need to know who's sending this, right? So you fill out your information up top and your phone number and email, right? So that we know you get the credit for it. We use Salesforce as part of our SRM system. So once our processing team gets this, it gets inputted into Salesforce. You get tagged as the referring agent for that particular scenario, and then that client is yours essentially forever, right? So if that client comes back to us 6 months later and does something else, you're tagged to it. You're still going to earn the commissions going forward on any of those clients. The first thing you want to fill out here is the sponsor's information. Who is our borrower, right? If it's going to be under their name or is it going to be in the LLC? We need to know what their FICO scores, their experience levels here, the net worth, just understanding the borrower. Now, the next thing we need to understand is the property. You know, what are we financing, right? Put the address of the property, you know, what type of property it is, basic information, that. Now, the only difficult part about this is finding out what type of loan they're looking for. If they're looking for a long-term DSCR loan, then just fill out the portion that says long-term rental. If they're looking for a fix and flip loan, then all we have to do is fill out the fix and flip portion. And if they're looking for a bridge with no rehab, then they just have to fill out that portion. So, you know, the only essentially thinking that you have to do when filling out this form is understanding if they want a long-term, a fix and flip, or a short-term rental. Ground up construction, it's more involved, which there's some more documentation. So if you have a client with ground up construction, just send Greg an email and he'll provide you with what we need. But essentially, a lot of times, if you fill this out properly and you get this over to Greg, the next email that he's gonna send you over is some quotes, right? So we try to make it as easy as possible. So you can always email realestate@financiallink here, or you can call the direct line, or call call Greg, which is your direct account manager. Right. Are there any more questions over there? There's some stuff in the chat.
Yes. Do you find your medical equipment if someone is requiring medical facility?
So we have a different. So someone asked if someone is buying a medical facility, do we finance medical equipment? So we have two divisions in Financial Links. One division is real estate, which we're talking about today. We have also a lending division, which provides loans for business owners. And if it's an owner-occupied property, and we can tie in the equipment into that transaction, but if they're just looking for equipment, something outside of real estate, then we would put it through the commercial financing division for equipment.
Is there a fee to start owner-occupied?
So owner-occupied, typically the way it works is we gather the information, we submit it to the banks, and then we get a term sheet from the bank. Once we have a term sheet from the bank, typically the bank is going to require some sort of like what they call is a good faith deposit. The good faith deposit is essentially to pay for any third-party costs that are going to be included in the transaction. Third-party costs being appraisals, maybe they might need an environmental report or attorneys or anything like that. Anything that they do not use in that good faith deposit gets either credited towards their closing costs or gets refunded to the client should the client back out of the deal.
Last question here.
Just going through the questions here, guys.
If the client is top tier credit and income is a great tax return, again, the best rate available on the market.
The answer is probably. So someone asked if the client is a tier 1 client, wants to submit all the tax returns and everything like that, are they going to get the best rates with us? Probably not. They probably go to their bank or their local community bank and submit their full package and get whatever rate that the bank is offering, which is going to be the best rate. We really focus, like our ideal client is clients that maybe went to their bank and didn't qualify, or they just don't want to deal with the full documentations and everything like that that the bank requires, and they just want something a little more simpler, right? So we're not going to be bank rates. We're going to be just slightly higher than bank rates, but far less than any hard money or anything out there that you would find online. We do have marketing materials. We have shared it with Dan, but we can also send it out to the team, the marketing materials that we have. I also did send everyone the actual PowerPoint. So you guys also can reference the PowerPoint presentation as leverage. Yeah. So if someone doesn't have it, please let us know. We'll make sure that we get it out to everyone. Let me just see if I missed any questions here.
What is the info for the unlimited
Equipment? I mean, you can contact sales@financiallinks.com and they'll point you to the right direction. Yeah. So, and then you can always, if guys, if you ever email one of us and we don't get back to you, you can always contact again Greg. Greg is a workaholic. He likes to work 7 days a week, guys. So he'll respond to your emails on Sunday, which I keep telling him not to, but he loves to work. Let me see. I don't think I missed any other questions. Anybody, Mia, do you see anyone maybe raising their hands or something like that may have a question?
Sure.
I did not receive the PowerPoint if you've already sent it out.
Okay. Great. Mia, what would be the best email, or who can I send the PowerPoint to make sure? I had uploaded when we accepted the call, but I don't know if you were able to share with everyone.
You can share it or send it with me, then I can send it to the NEXA LOs.
Perfect. That'd be great. Yeah, so I'll send it over to Mia, and then she'll display. I'll also attach some marketing materials that we have that would be beneficial for the team.
Okay.
Great, thank you.
Thank you so much,
Awesome.
Juan. Great. Let me see. I don't see anyone else, any other questions, but guys, thank you so much for your time. We're really looking forward to the partnership. Again, we're just trying to make your life easier by being kind of like a one-stop shop for all your needs, right? You guys are really good at originating residential mortgage loans, and we want to keep you doing that, right? And have the most time doing that. So if you're busy trying to research and trying to find out like who can do what, that takes time away from you guys doing what you're really, really good at. And that's originating the residential loans. So we are here. If you ever have any questions, you can contact Greg. He'll send over his information. He's also on the database, right? We're on the database for NEXA Mortgage. Yeah, just feel free to call us. But again, thank you so much for your time, and we're looking forward to working with you guys.
Hey, thanks a lot.
Thank you so much,
Thank you,
Juan.
guys.
Have a nice.
Thank you so much, Mia. Thank you. Thank you, guys.